Valuation in startups is running the table on everyone's patience. Founders, investors, they all get played. Everyone's obsessed with these numbers, these fancy multiples, but rarely does anyone look behind the curtain and see what's really going on. And that is brutal because the truth is out there, hiding in plain sight, but nobody talks about it loud enough. If you're sitting there thinking your valuation perfectly tells the story of your startup's worth, stop right now. It doesn't. It barely scratches the surface. This thing is rigged by hype, fear, greed, and desperation more than by solid fundamentals. And if you're an investor expecting these numbers to shine a clear light on the next big winner, you're walking blindfolded into a minefield. You feel that knot in your gut every time you look at these inflated numbers, right? That gut instinct telling you that something is off. The problem is, most don't dare admit it. They lean into the illusion, the safe number on the term sheet, the promise of growth, the shiny pitch deck. They forget valuations are guesses wrapped in assumptions, optimistic hope disguised as cold, hard truth. Here's what nobody says. Those numbers are often the smokescreen hiding real risks and waiting disasters. Founders might pad valuations to keep investors happy or to raise bigger rounds without real value backing it up. Investors sometimes push high valuations because they want to be in on a trend, not because they've dissected the business's core. This cycle inflates bubbles that burst hard, burning the very people who believed in the numbers the most. So how do you stop being the sucker in this game? First, demand transparency like your life depends on it. Nobody wins if the story's built on shaky assumptions. Ask the tough questions nobody else does. What are your real user retention numbers? How predictable are your revenue streams? How much is actual cash flow versus vanity metrics? Get beyond the noise. Second, look for founders who aren't just selling you hope, but showing you the grind behind the scenes. Real founders don't sugarcoat, don't inflate, don't play the safe game. They're brutal about the challenges because they know that's the only way to build trust. Third, investors, stop chasing shiny valuations without rigor. Stop pretending that a soaring number means a winning strategy. Put a magnifying glass on the unit economics, on churn, burn rates, and scalability. The best companies are the ones who can explain these cold facts without breaking a sweat. And here's the kicker. Valuations don't make the company great. Execution does. Execution makes or breaks everything. You're not investing in a number. You're betting on the team's ability to crush it, to pivot, to survive the brutal unknown. If your focus stays stuck on valuations alone, you're blind to the survival playbook. For founders, stop chasing sky-high valuations just to brag or to satisfy short-term ego boosts. Focus on building something real, something investors want to bet on because it lasts, not because it looks shiny for half a quarter. The worst mistake? Selling overpriced dreams that fall apart when reality hits. Everyone loses. The best move? Bet on truth, relentless transparency, and unglamorous, consistent execution. For investors, cut through the noise and get obsessed with understanding the real value drivers, not the hype. Pressure founders to defend every number with brutal honesty. If they can't, walk away. Protect your capital like a weapon, not a donation. If this sounds harsh, good. Because the startup world isn't a charity case, it's a battlefield. Winners survive by being brutally real, brutally honest, and brutally persistent. Valuations are just numbers, often meaningless if you don't see the whole game. Stop being fooled by the illusion of magic multiples. Tear down the mask. Demand real data, real honesty, and real commitment. Only then can you build a network of trust, a true community of founders, investors, and operators who are ready to build the future for real, not just for show. So lock in on what matters. Don't settle for the fake scripts. Rip open every valuation, interrogate it, and dissect it, because your future, your success, depends on it. Subscribe to our YouTube channel and open the featured link to discover more.